The Market Musings Podcast with Fairbairn and Russell. Hello and welcome to the Market Musings Podcast, where today our guest Scott Kaintz, the CEO of Corcel PLC, joins us. How are you, Scott? It's good to be talking to you again.
Doing well. How are you guys?
Yes, very good. Thank you, Scott. Very good on this rather warm and slightly muggy day over here in Rotterdam now, where I moved to recently. And Kenny, I heard you were having some rather warm in Scotland yesterday as well. How are you doing?
Yeah, I'm great. It's good to have you back on, Scott. Yeah, it was certainly very, very warm for Scotland. Yesterday it was like 23, 24. And I was out a walk last night and I was struggling, but I think that's more to do with my weight rather than the weather actually. But no, it's another beautiful day today. There's a nice wee breeze, so I think the barbecue will be coming out later, and maybe a few beers just to get rid of these terrible markets. Try and forget about them for.
That's right. It's definitely time to open a beer, have a glass of wine, and otherwise enjoy life a little bit, because the markets are making all of our lives a little miserable at the moment, I think.
Yeah, I think it's. You always get that thing, don't you? In the summer, generally, you sell in May and stay away until St. Leger's Day. And I always think that at least the warmer weather and the barbecues and the beers kind of offset the downturn in the summer. But I think this year is particularly worse off, probably because of all the bubble that was pumped up in the last 2 years of COVID, and that's sort of got to correct, I think, a little bit. That's probably why it's more exaggerated this time. But also, people are probably on holiday as well, aren't they? You know, probably more people are away than normal, so. It's
lots of pent-up demand, I think, to go overseas. And as you say, so much money pumped through the system now has to come out. So the hangover feels like it's going to be worse this time around than the last couple of times.
Yeah, I think so. And it seems like, the Fed are not, they're going ahead with the interest rate rises to try and tackle inflation. They're not going to pivot back anytime soon. So I think, some heat does have to be taken out. I think they know that as well. How bad it's going to get, it's anyone's guess, isn't it, really? But what I am confident on is that when we do come out of this, our space, the mining commodities exploration space, is going to be the place to be for the next decade, at least, with the green shifts that's coming and everything that's going to go on there. But what are your thoughts, Scott? I mean, have you seen something
I've been saying exactly that point, which is right now people don't seem to want to own anything. But when you think about when this market stabilizes and does come back, where would you want to be if not in commodities broadly and probably battery metals more specifically, right? I mean, that is clearly going to be the one of the first things to upswing, and we haven't really seen that filter through the juniors yet with rising commodity prices. But I think we all know it's coming. So whether it comes here in the next month or two or September or whenever that is exactly, I mean, that's nobody really knows. But I do think that this space remains an excellent one, and probably anybody getting in, obviously at today's prices, it's going to be extremely well positioned for that recovery.
Oh yeah. I mean, I'm not being a pessimist or anything like that, but I still see a few months of pain because nobody's really raising any money at the moment. We've not seen any of those historic, placings that it's like 30-40% discount to the current share price. And people hate that, but unfortunately, when companies need to raise money to keep the doors open, that's what happens. So we've not really seen that yet. I think when you start to see that, then I think that is the very, very bottom, and then hopefully the only way is up after that.
Yeah, I agree. I think it could be a little bit longer before we do come out of this. But, being forewarned is forearmed, isn't it? So you can, once you accept that might happen, you can prepare for it and position yourself ready for, as you say, Scott, some great bargains to be had out there in our space. And the sector will kick at some point, and we'll all do very well, hopefully.
Yeah,
go ahead.
Sorry, Scott. Yeah, just before we move on to Corcel stuff, I mean, investors will probably be interested, Scott. What kind of exercises do you as a company undertake to try and conserve cash in these markets? Because obviously cash is king. That's what people. When people are screaming and losing money and they've got a small amount of money to invest, that's the kind of thing they look at. How much cash has this company got? What's their runway like? Is it 3 months? Is it 6 months? Is it into next year? So it'd be interesting to hear your thought
Yeah,
process.
I mean, we've had very supportive shareholders that allowed us to raise prices. I mean, I think our last raise was 1.5p, and we've been able to defend that to a large extent. And some of that's bending over backwards and putting structures in place that allow that. So I think we've certainly done our best with that. You can cut some costs. Obviously, when you've got projects like our PNG projects, they have an ongoing burn there, and you can't sort of cut it to zero. But I think we are at a decent point. I mean, both of our projects are fairly mature. Both have JORCs. Both are moving towards mining leases. And so we're not at the point where we're on the hook for a $5 million drill program or something like that. They're relatively mature. And so I think that allows us some flexibility around timing of costs and things like that. And so, yeah, certainly in this kind of environment, the company and the board will be looking at the budget and saying, if we can defer things into the autumn, in some cases we will do that, and other things, are going to play out. Some of these things, money's already been spent; they're going to play out regardless. So it is a bit of a balance. But you're exactly right. Of course, I mean, any small cap is going to need to be dealing with these issues, and I think any reasonable board is going to be looking at the downsides and trying to do our best to ameliorate them.
Yeah, no, it has to be done. It's just one of these things, but. I mean, you touched in Woo Gap and Mambari there, but I wonder if we can just, we're going to do a kind of update in this podcast. So can I maybe step back a few weeks, and you put out quite an interesting RNS about the Dempster Vanadium project, which now is expanded to include some nickel interest. Can you maybe give us a flavour of what's going on there?
Yeah, it's kind of gone back to where it started. So when we picked this up in the sort of 2018 timeframe, it was being labeled a vanadium project. But originally, it was actually a nickel project. And they had drilled, the original owners had drilled 7 or 8 holes to that regards. And so we were trying to be a bit creative here, saying, is this something, have they really explored the nickel as well as they can? How much work have they done and what's possible? So we commissioned CSA to do a report to look at all that. And they produced a really impressive 80-page document or so, looking at other projects with kind of similar target horizons. They call it the NEMO horizon. And they found, frankly, that there are a lot of mines around the world, a lot of projects that do target this horizon. And what they're saying is that the history that, the reason the original nickel explorer moved away is that it is relatively thin in the areas targeted so far. But they found, really quite a bit of potential there around some domes and hinge areas in particular that really hadn't been targeted. And so, we sort of took a look at that and said, this needs to be expanded back to being not just vanadium, but nickel as well. Because I think at the minimum, the nickel aspect could become a byproduct kind of situation where you're producing potentially both and you set up a small nickel project. Or it might actually be big enough to be sort of semi-standalone, in which case you might have sort of 2 projects that are potentially over the same horizon. So, we stood back and said, nickel makes so much sense. It's something we're already in. It's a no-brainer to try to do this if the sort of geology stacks up. And I think we were, the report came back pretty positive. So, I don't know. I think this is us trying to be a bit creative. Little businesses like ours need to be flexible. We've got an asset. We want to make it a more exciting asset that makes it more marketable, that we can potentially do work on going forward. And in this case, the sort of feedback from the consultants was that it does make some sense to rebrand, to rebroaden, and to develop this as a nickel vanadium project going forward. And so, really, that's our intention. Again, I think it was a pretty exciting. And again, it probably goes below the radar a little bit in this market, where I think people are not really buying the quote unquote upside a bit. But I think we certainly thought it made a lot of sense to do that analysis, and we're pleased with the results.
Yeah, and I'm just looking at the kind of sort of potential work schedule. There's talk of a small drilling program as well.
Indeed, that would be where you would start. I mean, well, there's two aspects to it. You might consider targeting the nickel horizon thickening. That's one part of it, and then on the vanadium side, they basically did a bunch of work on how we would take that forward. I think they mentioned things like waterway avoidance. We need to do some work around streams and try to figure out, just how many tenements we have. That they actually suggested we pick up some more acreage in the area, which is relatively cheap to do, and then explore again how the nickel may integrate with the larger program. But yeah, I think that the way forward on the vanadium there is to clarify our targets, I would say, and then go ahead and do a drill campaign. I mean, that's kind of been the sort of broad plan on it for some time now. Yeah, this just gives us, the vanadium at the moment is the most valuable horizon that exists that we've identified. It's the bigger target. But again, I think I wouldn't rule out the idea that that this ends up being a bit of a hybrid project over time. And I think in the project, and I think in in the reports and in the RNS, I think we mentioned that there is a particularly close match out of Finland. It's Talvivaara, which uses a really unique bioleaching process actually to mine exactly this type of horizon. So again, it gives you some comfort that that projects like this do exist around the world and are in production.
Yeah, and obviously the location of the project as well in the Yukon is favourable. I mean, I can't remember the exact stat, but I think it's definitely in the top 10. I think the Fraser Institute worldwide.
That's right. That's right. Relatively straightforward place to work. Major highway next to it, so it is a little bit isolated in the big picture sense. But when you've got this highway and there are some indigenous settlements in the area as well, where you can get supplies in and things like that, it's honestly a lot easier than many places that junior explorers operate. So yeah, no, I think that's all in our favor. And obviously, Canada is a reasonably straightforward place to work.
Yeah, and vanadium. I mean, I like vanadium. It's a really interesting material, but it's probably a bit overlooked at the moment. It was a bit like lithium maybe 3 or 4 years ago. Nobody was interested, and all of a sudden, everybody wants it.
Everybody hears about these vanadium redox flow batteries and that they're coming, and I think they probably are. But I think that's the other reason we wanted to do this is vanadium is still niche, right? I mean, I think that's kind of what you're saying. It's still kind of not a primary target for exploration, whereas nickel, is about as primary as it gets. I mean, being a base metal, So yeah, I think vanadium will have its day. It's obviously gone through some spikes historically. In fact, that's when this project was kind of originally put together during one of the original vanadium spikes. But again, our take is that having this be a hybrid project, really having viable targets on the nickel side and on the vanadium side, really makes the whole thing quite a bit more valuable. And you can make more use of your time and your exploration activities when you're on site there.
Yeah. And what a lot of people don't know about vanadium, Scott, is that it was good that you brought up the redox flow batteries. That you can actually the vanadium in these batteries. I mean, say you've got one of these in sight, and after 15 years, everything else is breaking down in this system. You can actually take the vanadium out, and it's still got the exact same properties that it had on day one, and it can be used again in like super strength steel. I think that's one of the main applications for vanadium.
It is. It's the traditional application is steel strengthening. Exactly right. And you hear stories of buildings being built in China and places like that where the vanadium content was too low. They were trying to save money, and then you have real strengthening issues. I mean, you have buildings collapsing and stuff. So it is a key metal from that regard. You're exactly right. And these vanadium batteries are exciting. I mean, we certainly looked at it for some of our flexible grid solution sites. The issue, my understanding at the moment, is they're hard to finance. So banks have not kind of wrapped their head around vanadium redox flow batteries completely yet. And so if you want to go get debt and finance that type of battery, we're probably not quite there yet. I think the industry is comfortable with lithium, probably taking a look at vanadium, redox flow, but not quite completely comfortable with how that works. But yeah, Kenny, you're exactly right. You can run these things. They can recharge many, 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 many times. They don't degrade as much. And when they're done, you can basically recover all of the metal, which is kind of your point, which is pretty exciting and obviously fits, into all the ESG concerns at the moment.
Yeah. It'll have its day in the sun. So no, I think you guys are doing the right thing to position yourself in this vanadium space, because it will have its lithium moment, or it's copper moment.
That's right. And you got to get into these things. Let's be honest. If you wait to buy into them when they've spiked, I mean, we all know the prices go crazy. So you have to get into these things when they're either slightly out of favor or just a little before the curve, and then things can be pretty exciting.
Definitely. Mark, sorry, I've been talking too much. I almost forgot you were here. I'll let you jump in.
Yeah, sure. No, it's good to get an update on that. So, I mean, you've also had an update from WOWO, haven't you? Your purely nickel focused
Indeed,
project.
And nickel cobalt. Yeah. So we did the next step of our sort of WOWO gap journey a couple of weeks ago, and again, we're doing exactly what we said we're going to do. First, we upgraded our JORC to 2012, which really is a much more stringent economic standard. I think you and I talked about that a couple of weeks ago. And now we've released our gap analysis, which really just sort of takes that work and says, how do you take this forward to ultimately a mining lease in a producing project? And, I don't want to run through the whole thing. The RNS, I think, is fairly straightforward. But basically, we're going to look at a DSO operation. We're also going to look at high pressure acid leach, and we're going to look at a DNI process. We're probably going to do a pre-feasibility study leading to a feasibility study and a mining lease. And the PFS work has already begun. And, we use that RNS to kind of outline the roadmap for people so that investors can understand, where things go from here. But yeah, more broadly, I mean, I think we picked up WOWO gap, relatively little money. I think the historic spend is £8 million. And I think we've done more work on it in the last 6 months than the prior owners had done in the last 6 years, right? So, again, I think we are executing on this strategy of getting into these assets cheaply, early, and driving them forward to these value accretion events. In my view, the JORC update was one of those. The market's, again, right now, probably not exciting about much of anything. It's like sell on good news, sell on bad news, sell on all news kind of stuff. So we do get that. But I mean, I would just like to highlight that we are doing exactly, what we said we're doing with this project. And if you look at what's required, I mean, there's some additional work around logistics, some mine planning work, and some environmental bits to do. But the JORC work is done. I think we feel like we understand the geology, and this project is already much more advanced than it was when we purchased it over the last year or so.
Mm-hmm. Yeah, I can see that. Yeah, some of the highlights there. The geology is well understood, and it's possible to even upgrade the JORC resource to measured, which is, of course,
that's right. And you might expect that as part of the mining lease. I mean, that would be kind of a normal thing to do, that you can put some of these into higher categories as part of that process. It wasn't something we did on this first upgrade, but it is something that I would expect would be part of the mining lease application. Just to remind everybody, what we're doing with Wowo Gap is really just doing the same thing we did with Mambare. I mean, Mambare is a little bit farther ahead. We obviously have a lot of lessons learned on that mining lease application. And so the view here is that the Wowo Gap mining lease should be a lot quicker than the Mambare one has been, simply because you've got an established playbook, right? I mean, we kind of know how the MRA works. We know how to navigate the government better than we did. And, we're going to push this forward as aggressively as possible. So, these are big assets. Like I said, I mean, historic spend, I think on both of them is £8 million a piece. So, I mean, there's a lot of money has gone into these assets historically. They're very, very large. And I think as you see nickel rounding into form as a key battery metal going into everybody's cars and the power walls and things like that, these types of assets are going to be critical. And obviously, things like the war in Russia and other supply disruptions probably help our cause a bit as well.
Yeah, and obviously now that COVID seems to have not disappeared, but countries are managing it better. I take it it's full access to PNG. Everything's back as it was.
I think that's stable. Yeah, exactly right. We had trouble getting out there, obviously, over the last year or two. That's been tricky. Luckily, a lot of the work we're doing, as I kind of hinted earlier, is not drilling. Like, we don't actually have to have real big teams on the ground. It's mostly offsite consultancy work. Certainly the mining lease application, if you think about that, that's really just managing 6, 7, 8 different groups of consultants, right? Each one that kind of chips in on their bit, whether it's the economics or the mine plan or the metallurgical work or the bridges, or, you know what I mean? So it's a sort of big international desktop exercise, really. And it allows us to go from an exploration lease, which is a 2-year sort of revolving thing, to a 20 to 25-year right to mine. And our view is these are pretty big efforts. I mean, this is a real big change in the value of these projects. And I think we've already added some value, and we're adding more, over the coming months.
Excellent. And obviously you followed Wowo Gap up with a sort of full operations update. It was probably a couple of days ago. It was earlier this week, actually.
Yeah, a couple of days back. And it actually feeds on what we're just talking about, because one of the biggest things there was this offtake discussion that we've been having. So, we announced early this year that we had partnered with the NPC Group, which is a cathode plant in China, and their 3 big shareholders, to begin to explore how we might turn both Wowo Gap and Mambare into suppliers of raw materials for this plant. Frankly, COVID has caused some issues there. I mean, our main partner there on the mining side is part of the Sentient Group. It's a big group of natural resource funds, and they have been waiting for COVID restrictions to lift so that they could go back to China and to Korea in order to sort of corral and otherwise brief the various shareholders of the plants on how we might do some things together. And COVID's been a real problem. I mean, you guys all know the lockdowns in China have been really significant. And, our main contact is actually Chinese. He's located in Sydney, but he didn't want to go sort of live in a hotel for a month, right? So, I mean, this is one of these things, I'd say, to some extent, COVID hasn't caused that many disruptions to us, but this is one where it really has, right? And I think we all know the Asian way of doing business, at least stereotypically, right? Is sometimes you got to kind of sit around and have some drinks, right? And really talk about like how these things are going to go. And that's just not possible on Zoom at the end of the day, right? So COVID has really caused some delays there. What we put out in that last update was that our partner has gone to Korea and briefed the major Korean entity, which is called Cosmo. They're one of the largest cathode producers in Korea, and they're a major listed company there in Korea. And it went well. I think everybody's excited. I mean, he also gave us a bit of an update on the plant itself in China, where, the quick version there is that orders are bonkers. I mean, everybody wants cathodes for batteries, right? We all know that. But interestingly, margins have not followed, right? And why is that? High input costs, right? I mean, they are still struggling to get reasonable input costs to the plants. Now, let's think about that. How do we fix this problem? Well, we own our battery metal supplies, right? Or otherwise, have access to, let's call it somewhat, more reasonable sources. And that is where obviously WoWoGap and Lumbari come into focus a bit more. So then our mining lease is what I've been talking about earlier. It's not, sort of a theoretical thing, but you're merging it together with an actual operator that wants those, these raw materials into their plants. And, there is some intermediate steps there. There's a precursor plant that would have to sort of effectively do some processing of our DSO export. But the good thing is that NPC, it has contacts with these precursor plants and can arrange for that flow through to work. So these are all the things being discussed. NPC is now sort of commissioning a report. So Sentient, again, the mining experts of the group are commissioning a report internally to basically summarize where we're at and where we want to go. They have invested in some other natural resource projects, so we would not be the first time that this group has sort of secured some raw materials. We're going to be sort of the second one, effectively, and all looks really exciting. Again, I just a little bit disappointed the market doesn't seem to value it at the moment, but I think it's just sort of the state of play right now, as I guess we all know.
Yeah,
yep.
Indeed.
Yeah.
Okay. Well, what about the flexible grid solution center? Scott, that's the more, I'd say it's more exciting, but it's certainly the more kind of near term, isn't it? Kind of cash flow opportunity, something a bit different as well.
Yeah.
What's been going on there? So not the best outcome regarding Avonmouth, no?
Correct. No, I mean, it's a fair point. I mean, just to sort of remind everybody, I mean, we picked up the rights to this gas peaker for, I think it was 72,000 pounds last year, basically. And so we didn't own any of it. We just had the right to market it. And, I've briefed, I think, we've all talked about it a couple of times. We did a massive marketing effort. I think we showed it to sort of 40 to 50 different groups, something like that. We did a real slick presentation. And everybody was very happy with both the project and the economics. And, what you run into is that a lot of the groups just said no straight up. I mean, that's fairly normal. And we probably had 5 to 7 groups look at this very seriously. And, and I think we've talked about that on previous interviews, some of which were very serious at various points. All like the economics, and I think all bought into the strategic rationale that gas peakers are absolutely required on the grid. People see them as an enabler of renewables, as we all talked about. I think everybody liked our team and they liked the prospects. But interestingly, the feedback was very, very consistent. The 5 to 7 groups that dug into this very deeply all came back with the same story, which is in today's ESG ESG centric world, we cannot or ultimately won't be able to take the hit with our LPs and our investors to invest in gas. So, that's why, I think investors say, why does this take so long? It's not a matter of filling out forms. We're briefing people, we're showing them the PowerPoint, we're going through the economics, we're getting them comfortable with that. And then they have to go back to their own investment committees, to their own LPs and say, here's what we want to do. We want to go invest in a 50 megawatt gas peaker. And to the T, they came back and ultimately ran into sort of, this conceptual trouble that we like the returns, the economics look amazing, but I can't take the political hit internally, right? I don't want it in my annual report. It's not worth it in that sense. We'll give up the returns, ultimately, because we can't, we couldn't get internal approval to ultimately do it. And so unfortunately, that's kind of the story here. I mean, it was a really frustrating experience for us at various points. We had a large French infrastructure group. We had a major kind of natural resource bank looking at this. We ultimately met Altana through this. So, I mean, some good has certainly come out of all this. We met a funding partner that is interested. But even Altana, is kind of making the same noises. They're sort of saying, we could possibly do a gas peaker, but really we want to do batteries. Not because we don't recognize that gas peakers are required, as I just told you, but because, it's just easier for us to get internal approval for batteries. And it's a little worrisome, right? I mean, it just feels very short-sighted to me that the European investment community more broadly has kind of all decided collectively that these assets should not be built. Whereas the National Grid and the UK government is saying not only should they be built, but they should operate for another 30 to 40 years. And they're required to do that. So I have to admit, having gone through this process now, I'm a little concerned, with and the politicians, I guess, are going to have to dig into this. How do we keep the lights on with more and more renewables if we're not going to build any new gas projects? Because my take, for what it's worth, is that these projects are basically unfundable. I mean, like I said, it probably sounds a little bit weird to say it, but I'm very proud of the effort. I mean, we really marketed this to many, many groups. I think we did so in a professional manner. The feedback was almost always very positive. And the story was, we love you, we love the project, but we can't touch the sector ultimately, or that fossil fuel space. So,
did it take you by surprise, or did you kind of get a feeling it might be like that?
Well, I think you feel that over time. As I said, we did get a lot of straight up no's, I mean, like when you go through the sort of, whatever it was, 45 or so different groups, and we kept a big spreadsheet, obviously it's sort of typical, right? And you get a lot of no fossil fuel right off the bat. So you kind of get the feeling, okay, I understand that not that many groups are going to look at it. But you only need one to hit, right? I mean, like we don't need 6, we need 1. So the view is like, if we get 5 or 7 serious groups that are willing to at least take a good look at this, dig into it, do their DD, and broach it internally, that you can get that done. And right up to fairly recently, I think it certainly looked like that was possible. The Avonmouth rights, were not extendable forever, right? I mean, we continued up the market as that worked. I mean, the 72K bought us a period of time. We extended it informally a period of further time. But there's a point where all parties kind of have to move on a bit, right? I mean, you ultimately kind of run out of puff on that. And so, unfortunately, we had a few that went pretty far down the rabbit hole. And like I said, came back with our LPs won't do the deal. And like I said, Altana was kind of one of those. It's one of the more recent ones. Pretty exciting. They want to be a partner. They want to fund our projects. But they also, ultimately took a bit of a view that they, are not going to really be able to fund gas peakers. I mean, I think if it was a hybrid site of sorts, you might be able to do something like that. So it's possible we can look at gas hybrids with batteries. And Avonmouth actually has some potential with that. But I mean, ultimately, the landlord at Avonmouth, let's be honest, they've had the Avonmouth gas peaker for years themselves, and we're unable to fund it either, right? So I think the takeaway here is gas peaking assets are, like I said earlier, possibly completely unfundable in this market. I mean, I'm pretty confident to say that. There are few, if any, players ultimately that appear to have an open enough mind, are willing to take the hit politically to fund these things. And as I said, I think that should probably worry us all. Unfortunately, it's a bit concerning with how the UK is going to deal with that.
Yeah, indeed, and of course with what this winter might bring as well, considering the situation in Russia and the concerns about gas. I think they're already planting the seeds with the public that there's going to be energy rationing. As Switzerland actually said something quite publicly, we expect to ration energy because we haven't got enough. So maybe the whole kind of environmental ESG thing might go out the window when we realize we can't. One
wonders, right? Yeah. It's like all these things. Like, I'm pretty pro ESG. I think there's some good aspects of that. But when it becomes a religion, when it just trumps common sense, effectively, you really start to worry about it. It's like, one investor trying to be holier than thou, holier than the next one. It's like, that's scary stuff. I mean, there has to be a certain amount of realism here. If we want renewables, we need transitional power projects. Batteries can run for an hour or two. Gas peakers can run for a day or 2 or 3, whatever hours and hours and hours, whatever's required. They're not the same thing. So you see what I mean? When investors say, well, we want batteries, we don't want peakers. Well, those are not equivalent assets. They do play broadly in the same space, but you need both, really. And so what you're going to end up with is a lot of money chasing battery assets, driving prices up. Returns are probably going to be pretty poor over time. Too much money chasing too few projects. And gas peakers, which also need to be built, which needs to run for the next 30 years, are not going to be built. So it's, like I said, it was a bit of a frustrating experience and a little bit concerning. And stepping back, I think if you put it in perspective, again, 72K, that's the write-off here. I mean, how does that compare to our large mining project? It's tiny. I mean, it's, so I do feel to some extent, and, I understand people are disappointed. I'm disappointed. We took a bet on gas and it didn't work, but I feel like it was a smart bet. Like, it's a bet I would do again. I think, it was a low cost, high upside, near-term bet that if it worked, would have given us a couple million in near-term fees and, and an ongoing carry. And I'd do it again anytime. I mean, I think we did the right thing. But again, in this market, I think it's, as we joked about earlier, it's sell good news, sell bad news, sell all news. And, obviously it is a disappointment that this particular project didn't work out. We do still have the rights to Tring Road, and we are working with our partners there, Arlington, on how we take that forward. I mean, it's going to be a similar situation in the sense that it's not going to be super easy to fund, a similar peaker, but there may be some conversion opportunities, and there may be other, opportunities to do some things with that. So we're certainly working on that. And Arlington, is the majority stakeholder there. So, I mean, I would point that out. There is some difference. We never owned any of Avonmouth. We had the right to market it, and we thought a very cheap entry point. On Tring, we do actually own, a big chunk of it. So that those rights continue on. But our focus generally on FGS is really going to have to go to the batteries, and it's really about the partnership with Altana. We've got a funder in our back pocket now who says we can write checks, for these types of projects. And so we are going to some extent shift back to batteries. But it is a hot space. I mean, the reason peakers were attractive is it was slightly out of cycle. They were slightly unloved from the beginning. Again, some of these rights had been sitting around for a while. I mean, we knew that it was a bit of a mountain to climb, right? I mean, we knew that the market was turning to batteries, and that's why we thought the peaker parallel process made sense. And again, on 72K a pop, I'll take that bet any day of the week. I think it's the right thing to do. I think it's what we're paid to do. And while I certainly am disappointed, and I understand investor disappointment, let's put it in perspective, right? I mean, we're a big mining company. We're a small company with some big blue chip nickel assets that have a lot of blue sky upside there. We've built this FGS side of the business to take some really inexpensive short-term bets. Some are going to work, some are not. And I'd like to think investors want us to take those bets. I think it's the right thing to do for all parties.
So Corcel as a company will have to pivot a bit then and go down the battery route, you reckon?
Well, we're already in it. I mean, it's not that we ever left it. It's just batteries are hard to get a hold of, right? I mean, that's kind of what I'm saying. When we first got involved in this space, people were paying 25 to 30K per megawatt for batteries. The most recent numbers I've heard are 130K per megawatt for batteries. So there is so much demand. So many investors want to be in that space. It's so sexy. What's going to happen are people going to spend too much money for these batteries, and the economics are not going to be viable. And the other aspect of batteries is, the expectation is that you're going to get a 4 or 5 year period here where some of these extra services, dynamic containment and other things are very profitable. Again, as more batteries come online, some of that real high upside is going to be winnowed away, right? I mean, it's going to revert to the norm, right? And so batteries are going to have to kind of play in what you might consider a quote unquote more normal market. So we're pro battery. I'm not saying we're not, but again, I just think going down multiple roads made sense. And unfortunately, right now, investors, they want to be able to tell their own LPs and and sub investors that they're in the sort of super, they're checking all the ESG boxes and they're building batteries, because it is really a sexy thing to do. So yeah, I wouldn't call it a pivot. I think it's really just a rebroadening or a refocus back to some things we've already looked at. Obviously, we have our rights to the Burwell project up there in the Cambridge area. That's been slowed because of grid congestion issues. Again, another very, very common problem in the UK at the moment. I mean, the grid will give you a connection, and then they'll turn around later and say, oh, there's some expensive upgrade works that need to happen, and that needs some time to work out, right? So these are issues. I mean, there aren't that many sites available, and it's not easy to get into batteries at an inexpensive price. Now, we do have some portfolios we've looked at. We haven't really announced too much of that. I mean, we have said that we're looking at some things. We had some earlier stage batteries we've been trying to develop, and we will obviously make announcements as those come forward. And I think, we have Altana in our back pocket supportive of this. They want to fund these things. It's a huge upgrade. So I think if investors, again, we're willing to look at like what came out of your peaker project effort, it's a funding partner. I mean, the funding partner, interestingly, didn't end up wanting to particularly fund the gas, but they do want to fund. They do want to work together. And I would just highlight that point.
Okay. So where do you go from here then, Scott, as a company with regards to the FGS? Do you have a plan of action?
Yeah, no, like I said, we're gonna work with Altana to develop these earlier stage assets. We are looking at some more mature things, as I mentioned, and that's about all I can say at this point. I can't be a bit more specific. But I think, we're going to some extent move on from the gas and focus to where we think we can deploy capital. I mean, it goes without saying, if a peaker is sort of broadly unfundable in today's ESG world, then you can only spend so much time. I mean, you can knock on the doors. I think we've covered all the main groups, as I said, and it's we just have to reflect reality, and maybe that'll come back around. I don't know.
But in terms of sort of where your focus is or where you deploy capital, you're still planning to evenly split between exploration and the near-term cash flow opportunities from FGS, or have you changed the kind of allocation there a little bit?
No, I think it's always been a dual track, right? I mean, you have these big blue sky mining bets, like I said, that tend to have longer processes. The FGS stuff tends to be a bit more binary, as we know. Trying to pick up development rights before they're mature, and then take them in to be funded. I mean, that basic strategy remains in place, and there are no plans to change it. I think, as we said at the beginning of the podcast, our positioning here is, in our view, right where we need to be. I mean, we are perfectly positioned for a commodity / transitional energy bounce back when the capital markets stabilize. I mean, I don't know when that's going to be, of course, but I do think our positioning remains good. And no, I think nothing to change the strategy here. Like I said, an effort to fund a gas asset that proved to be unfundable, does not question what we're doing. Nor do I think we should. It's simply, we're paid here to take smart bets, to take inexpensive, high upside bets, and we did that. And like I said, I'm proud of the work we put in. I mean, I think it didn't work this time, but I think we did a good job.
Okay.
Yep. Just before we finish off, Scott, I wonder if I could just jump back to Minbari and the operational update. And I think it'd be good for investors to understand what DSO is, because they probably hear about it quite a lot, and obviously it's direct shipping ore, but maybe it'd be good to explain the process and what effect it has on the financials of the project, because it's huge.
Yeah, it does. DSO effectively means you don't need to go raise, $1 billion to put a big fancy plant up. You don't need electricity. You don't need as much infrastructure, right? So a DSO operation would be considered kind of a first stage of one of these projects, where you effectively dig up the ore, dry it out, maybe do a little bit of sorting, truck it to the coast, and then ship it off to points in Asia effectively. And that is the plan on both Minbari and Wowo Gap. It allows us to bring the CapEx down from, let's call it $950 million or something like that, down to like $30 million. Obviously, it makes it a lot more viable for a small company to do. And it could lead to a follow-on plant where you do more processing in country later on. So, we've seen this as the most viable way to take these two projects into production. And the mining lease at Minbari and the mining lease underway at Wowo Gap are both going to basically be DSO operations at present, with the optionality, as I said, to potentially change that to a larger local plant with processing in time. But yeah, I think it's a sensible thing to do, effectively, especially in a place like PNG, obviously, where, if I was to sit here and tell you, oh, we're going to go build a power plant and we're going to, it just starts to become a bit, fantastic, I think. So this is matching our company's capabilities and size with the right way to take these projects forward.
Yeah. And obviously the port facilities existing port facilities are there, and they've got the depth, for these. I mean, I'm assuming it's massive, sort of bulk carrier vessels.
Yeah, these are bulk carriers. That's exactly right. Yeah, that's some of the work we've been doing at Minbari lately. That's correct. I mean, we've been looking at 2 to 3 different sites. One looks like it might have come in a little shallower than we thought, and 2 look pretty viable. So yeah, exactly right. I mean, there's some existing port facilities at Oro that we're looking to sort of they've got some international money that are going to upgrade them, and we're working with the port owners actually to make sure that they take into consideration our future export requirements, right? So it's really a great time to be looking at this. And then, you never know for sure if that's going to work. So you always want a plan B. And we've been looking at some local port, there's sort of bays really right down the coast as backup plants. And depending on where we end up shipping from, you might have a sort of barge system where you bring it out to the bulk carrier that sits offshore. If it's at Oro Bay itself, then the bulk carrier may just be effectively right there at the dock, and you just have a conveyor system. So again, we're at that stage where you're a little bit flexible on exactly how that all works. But the idea is to have plan A, plan B, and plan C, so that one way or the other, the ore can be exported, and this thing can be a viable producing asset here.
Yeah, no, definitely. I think it's a good point to bring up, because, like I say, a lot of investors, they've heard of it and they've probably scratched their head, but it has a massive impact in the project, and obviously with both of your projects, with that capability, it's a big tick in the box. But no, I mean, it's all going ahead. I mean, I know people complain that the markets are terrible, the share price is getting trashed. But it's not just you. I mean, every year,
no, correct.
There's a couple of strange ones out there that are 52-week highs and things like that. But like 99% of junior explorers are like sitting at 52-week lows.
No, exactly right. We actually did some analysis on this ourselves the other day just to sort of see where we sat. And this is 10 days ago or so, but we were down 26% or something like that. And there are an awful lot of players down 58, 59, 70%. So it's miserable. It's miserable. It really feels to me like the broader, junior space has been out of favor since Easter last year, not Easter this year. Exactly. Even. I mean, it's gone on a year. And that's why I feel it's so well positioned for the bounce back, because it's not like we've had a good period for some time. I mean, there was that brief sort of post, COVID stimulus period where I think the space had a bit of a run. There's a lot of money floating around. And we've been out of favor just broadly for quite a time. This despite war in Ukraine, despite really high commodity prices. So, I look at what we're up to. We've got a North American investment bank trying to bring, working actually aggressively to bring money into our project. We've got a major off-taker, being developed as we've all talked about today. And we've got 2 big mining leases moving forward at our major projects. So there's quite a bit in the pipe. There's quite a bit. We're doing exactly what we said we're doing. And, we're confident this is going to come good for investors. It may take the markets to stabilize a little bit, but we think the strategy remains spot on.
Excellent. All right, Mark, have you got anything to add? No. I think that's about 40 minutes, which is a decent time for an update. Yeah,
for an update. We've got a good update there across everything, which hopefully shareholders can appreciate. There's not, as we've discussed, there's not many maybe investors on holiday, or there's not so many eyes on that kind of business. The sector's just not in flavour, but also the market's broadly not doing so well. But to get a good update there, Scott, on what's going on, I think that's very useful. And however long this downturn goes for, it will go on, I think, certainly throughout the summer, possibly into the early part of next year as well. But ultimately, we all know it comes back, and as I said at the start, the green shift is going to be the catalyst for this space that's well overdue its period in the sun.
Indeed. And hopefully we provide a little context. I mean, we do our best, obviously, to make things clear in our RNSs, but we all know that goes through a process with a nomad, and So I do think these conversations are good to sort of paint the bigger picture of what we're doing, what's important, and how it all fits together. Yeah,
indeed. Well, thank you very much for coming on today, Scott, and we'll catch up again when necessary. Maybe after the summer. I don't know. See what happens. But thank you for your time today.
No, thank you both.
Excellent. Thanks, Scott. Take care.
Thank you for listening to another podcast from Market Musings with Fairbairn and Russell. Tune in next time.